won't stop till I hear him say,
Warning. The information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now.
I'm going to break down this GBP-JPY trade. I sent you guys ahead of the curve at 9 p.m. Pacific Standard Time, roughly around that time. It was like in between 9 and 10. So that was right when price action was around here. I'm going to break down for you all why it was that I was looking for a bullish continuation based on the past two previous market sessions during the Asia, London, and New York overlap right here in this general vicinity. Why it was giving me conviction that the market was going to go higher based off the higher time frame confluences in tandem with the lower. Always making sure, ladies and gentlemen, that you're remembering that what it is that I'm attempting to teach you here in the CYPRX course material is what quality traits must the market have before you want to be a part of it, okay? So don't just think that every single session is going to give you a certain setup because you see a certain set of CYPRX confluences. You need to make sure that every single thing that you're seeing in the market is moving in tandem with your directional bias. The higher time frame, right? What direction is the higher time frame trading? What direction are fundamentals trading, right? Although we're not fundamental, traders here at CYPRX, if you can get fundamental analysis in line with the higher time frame trend alongside the lower time frame fractal trend being all bullish signals, then you have a higher probability for a trade to go in your favor. So realistically speaking, this whole entire trade started because I wasn't honestly even going to trade London session this week, okay? But I was sitting there, I was just like, it's 9 o'clock at night, I'm about to go to bed. Let me sit down and read a fundamental. So I was like, okay, this came out at 7 p.m., I believe it was, Pacific Standard Time, if I'm not mistaken. And this article, just quick little two things that got me. I was like, oh, come on. I'm a predominant bullish trader on GBP-JPY. I like buying GBP-JPY. You guys know that I'm not a seller. So my expertise come in when it's time to buy. So I sat here and I read this little tiny fundamental. It talks about how the market sentiment was an upbeat mood, right? We already know that GBP-JPY is a risk on asset. That means that, right, when there's a risk on mood, GBP-JPY is usually bullish, right? When there's a risk off mood, vice versa. So I just literally highlighted this right here. In the long term, GBP-JPY remains neutral to upward bias. I was like, okay, I haven't looked at the chart since I believe it was Monday's New York session. So looking over at the price action, okay, we had this consolidation area here. Yeah, it was this New York session. So this New York session I traded, and I believe I sent you guys the analysis. I got stopped out on the trade at break even, okay? So reanalyzing the market, looking at the higher time frame, again, making sure that you all have the higher time frame confluences in tandem with the lower time frame confluences, just to show you guys the analysis that I sent you all. Okay, I said bullish targets are 168.800 to 169. You guys can see that those targets were met. Let me minimize this. Okay, this was when price action was back here. So I just want to show you guys what it was that I was seeing in the market and why it was that I was sending you all this logical technical analysis setup. Again, you guys know that nothing that I constitute here is financial advice, but honestly, Emiliano's been with me the longest, so he could, vouch for this. I'd say that 99.9% of the time I send you guys an analysis, I'm almost like that. I'm that sure that the market's going to play out into that favor based off of logic, right? It's not that I'm telling you guys the market's going to go that way or whatever the case may be, but I only send my analysis to you all when I have a high conviction that that price action is going to come into fruition, if you all haven't noticed, okay? So I said, of course, best case scenario for buyers interested to take price higher would be to catch a pullback. Therefore, I will remain a buyer as long as price is above the 165.500 level. So I'll go over that as well. The last like level I have displayed is the 164.800. If this level breaks, the bullish thesis will be revisited. I was mentioning to you guys as well, this is for you. I'm not going to mention your name, just the individual that we discussed earlier. You are in a sell position. I said, be careful and don't attempt to guess tops. If you are a predominant seller, make sure to pay attention to structure and only react after the market has confirmed a reversal. That way you don't get caught as exit liquidity for buyers. As of right now, in my opinion, GJ stands with buyers temporarily in control until the levels that I have mentioned are broken. I will only be a buyer. I personally will not be looking for any sells, even though now I'm telling you guys that I'm looking for a potential pullback into 168, 400 into 168, 200. And I said not financial advice, and I sent you guys the analysis, right? So let me show you guys why it was higher time frame. We're going to start on the hourly, and then we're going to go all the way down to like the 1 minute, and then we're going to get into the London session entry. Now, London session for me personally is kind of a little bit shaky because I've told you guys too as well that if London session is going to buy on JPY, they're going to buy the Great British Pound. 90% of the time they drop price in the manipulation window and then buy up price within the manipulation window. And that's something that I've noticed via backtesting thousands of hours. Okay. So sending you this analysis, bullish above 164.800 and 165.500. Let's break that down first. So that way you guys can just see why I was getting that higher time frame conviction for price to come and take out these equal highs or these over leveraged retail dummies that are trading resistance here or order blocks or whatever it is that they're trading, right? Most likely they're highlighting some order block here in this candlestick, right? Or order block here in this candlestick, these two order blocks. Okay. They're extending that over. And they're expecting price because their overcharged course mentoring programs told them that order blocks exist in the market and that market makers actually take positions from order blocks. That is irrelevant and not realistic at all. Okay. You guys can see how over leveraged retail resistance traders are most likely drawing some type of box here, taking sells from these levels or taking sells from order blocks. And the market makers came and sifted their price action straight through and liquidated any over leveraged players that were selling above these two highs. So I gave you guys that equal high analysis in the screenshot that I sent. Okay. So that was one logical reason as to why I was expecting price to come higher, because we have a hourly area of retail resistance. Okay. You guys know that the higher time frame bias is always stronger than fractal nature timeframes. Okay. So if you guys see equal highs on the I mean, these equal highs even go on the 4 hour. If you go to the 4 hour, you guys can clearly see equal highs right there. Right. So anything that's on the higher time frame, the hourly and above, needs to be paid attention to more so than anything that you find on the lower time frame via liquidity traps. Okay. So if you see a set of equal lows like down here, these are pretty much equal lows, but on the hourly chart, look at where price action is all the way up here when I sent you guys the analysis. Yet we see price action is a lot closer to these equal highs. The market makers are going to attempt to make money the fastest. Well, the fastest way for them to make money right now is to liquidate any over leveraged players above these highs. So that was one conviction, giving you guys my analysis as to why the market could run up into 169, which it did. Okay. Second was structure. All right. So looking at the hourly structure, again, just focus and pay attention. Remember what it is that I teach you guys, identifying areas where the markets were manipulated. The markets created a higher low that led to a higher high, higher low continuation. Well, if you guys can see here, I said in the message, 164.800 is the last psych level where I'll be looking for buy positions. And that is because that is the last area where before price started to rally higher and create predominant bullish order flow, this is the last area where the market makers manipulated price. So you guys can see here, they manipulated any retail traders who were attempting to sell some type of trend line here. Okay. We have a triple touch of a trend line. The market makers liquidated those highs. Any over leveraged players operating in this space right here were completely liquidated. The market sold off. People most likely chased bearish candlesticks, placing more sell positions. The market makers liquidated lows, created that pattern that we like to see here at CYPRX, which is a liquidation of lows, higher low that breaks previous market structure. Okay, so this is the first institutionalized pattern that we pay attention here at CYPRX, where we have a pre-engineered low in the market, pre-engineered highs in the market via retail liquidity. The market makers entice retail buyers early on in the market. I guarantee you, if we turn on the session indicators, this is going to be during a New York, Asia, or London session manipulate. Yep, London session manipulation window right here. Boom. So they left behind liquidity during the New York session manipulation window right here. The market makers come for that liquidity, create the pattern, higher low after the liquidity sweep. So here's the set, here's the sweep, here's the go. We break market structure. The last significant level that price held above in the form of that higher low after the liquidity grab is the 164.800 psych level. Okay. So in the message that I sent you guys, I said that as long as price is above this, I am bullish. So that's even if price, because I'm a predominant buyer, decided to pull back like this, I would have still looked for buy positions to take price higher, because this is the last area of interest where the market makers showed the willingness to overpower sellers. Okay. So that was the reason for that psych level. Second psych level. Okay. 165.500. We see the same exact pattern in this area right here. Okay. So you guys can see if I go down to, this is the 165,500 level during the manipulation window during New York session. You guys can see the same exact pattern that leads to a market break in structure. Let me clear some of these drawings up. And again, this is just, I'm showing you guys how I logically mark up my charts. You guys might have, you know, a different strategy that you use on the higher time frame, which is okay, to mark your areas of interest. But, you know, if we all technically stick to a strategy that works, which I've proven to you guys time and time again that the way that I analyze the charts works, and you guys come into the market starting at the higher time frame and you go down the same way that I do, then in a sense, you guys will be kind of accumulating the information and then being able to apply it properly. You guys can clearly see how the analysis on the higher time frame gives you an advantage, because you're learning how to trade in tandem with the market makers. So here in this area, same pattern here, pre-engineered low, liquidation of low, higher low that comes after that. You guys can see the same pattern. Here's the daily open, Asia session. Okay. Here's pre-engineered highs in the market in the form of a triple top formation, 1, 2, and 3. And if you pay attention, each of these triple tops happens during the manipulation window. New York session manipulates sellers. Asia session manipulates sellers. London session manipulates sellers. We already know higher time frame is bullish order flow. We have a pre-engineered low in the market during Asia session, a pre-engineered low in the market during London session. New York session sells, buys from a discount. You guys can clearly see if I just extend this over from where the previous New York session bought from. Okay, here's the same exact pattern. We see a pre-engineered low in the market, liquidation of that low, and then if we drop down to the like maybe 30-minute time frame, this candlestick right here will be the higher low after the liquidity grab. So it's the same exact pattern. Set, sweep, higher low, go. That breaks previous market structure if we look over to the left-hand side. Okay, so that's where I got the psych level. If you see where that higher low was created, 165.500, and both of these are major psych levels, 800 and the 500 psych level. Okay, so those are the two levels where I said to you guys in that message, you know, higher time frames bullish. We can clearly see what the market makers are doing. They're continuously pushing price higher. They're continuously manipulating highs, enticing sellers, liquidating lows, and then making new market structure highs. So the order flow is to the upside. You want to be trading in tandem with that and looking for positions surrounding market continuation moves higher. Okay, so remember I just said to you guys, the CYPRX strategy is designed to teach you all how to look for certain quality traits in the market based off of your skill set. And my skill set is being a predominant buyer. So knowing all that information, having a higher time frame conviction, now coming into the trading session for London, what I was seeing is that the market makers were creating the same exact pattern. And what I was attempting to do is get in on the trend continuation higher to attack retail liquidity above highs. So if we already know the hourly chart is bullish, coming into this London session, let's get rid of the replay tool. Okay, coming into this London session, we know higher time frame is bullish. Now let's start to identify areas of interest via what this price action is displaying us so that we have areas as to where we want to be buyers. We know that we want to be buyers from previous areas where market makers bought from. So before this London session played out, we'll just replay price action right straight to this London session. Okay. First, we want to go over our advanced tracking methodology. So we want to gather up some areas of interest where we could be buyers from. We already know that above those two psych levels down below, we're bullish. Okay. Now we want to be looking at where the previous market makers manipulated price and bought price from. So here you guys can see what Asia Session's conviction was. Asia Session, they wanted to buy, but they weren't going to buy from a high. So instead, they sold price, leaving behind areas of liquidity during the manipulation window above highs. They created the equal high. Okay. They created the equal high that I showed you guys. And you guys can see over here, they were simply just selling from where London session sold from a previous session. Okay. Now coming over here, you guys can see that they tanked price. London session prior to this London session that we were trading, dropped price down into a discount, and they bought from New York session. So highlighting from the candlestick bodies down to the wick and extending that over to the right-hand side, you guys can see that this London session bought at a discount from where this New York session bought from at roughly extending the Fibonacci retracement from the low up to the high. They bought from roughly around maybe like 75% discount from where previous New York session bought from. All right. So here's another higher low in the market on the higher time frame. This is on the hourly. So now this higher low is irrelevant. Okay. This is the next significant area where market makers bought from. Okay. So again, you want to be looking at highlighting from the candlestick bodies down to the wick. And this is just to save you from having a whole bunch of boxes on your chart. Okay. If this box gets broken, then we can go down to the next area of interest. But until then, this is the last area of interest where the market makers bought from a discount. Okay. So we'll just highlight that significant area. And I told you guys you want to gather at least 2 significant areas where the market makers broke previous market structure. You guys can see that the market makers bought here, created a new fractal market structure high in comparison to the previous London session. So this was a technical break of structure. If we go down to, let's say, the 30-minute time frame, okay, you guys can see here how these candlestick bodies are equal to these ones. And what is in this area right here? Okay, what do we see here above highs? Now on the 30-minute time frame. You can go ahead and answer that if you want.
Equal highs.
Equal highs, right? So exactly. So now we have equal highs on the hourly. We have equal highs on the 30-minute chart. We have a bullish environment, i.e. price action respecting bullish order flow. We'll just go ahead and put this as liquidity top. Okay. During the manipulation window prior to the London session that we were looking to trade, okay, we have equal highs left behind or liquidity trap set, manipulation box. That's the general manipulation box for London. General manipulation box for New York. And we could see what the market makers are doing. They're enticing sellers, pushing price down into a discount, and then buying from a discount where previous sessions bought from. So now coming into this new day's worth of price action, we see that the market reset itself roughly at around 1400 Pacific Standard Time. That's 5 p.m. Eastern Standard Time, if I'm not mistaken, when the market kind of reset itself. And Asia session bought from a discount from where New York session bought from. You guys can see here, price consolidated for a little bit. And then market makers during New York session sought to buy price action at a discount from the psych level 167.700. So again, to clear up space on our charts, you guys can keep this stuff on your charts if you want, but I like just having one area of interest as we go. Okay, 2 max. So the second area of interest where the market makers bought price action, highlighting from the candlestick bodies down to the wick and extending that over. Okay, you guys can see here, New York session bought, Asia session restarted the market, or the market rolled over into Asia session, price action reset itself, spiked down into a discount. Asia session bought from a discount from where New York session bought from, and price did what? It came to attack the equal highs. So now we have a new area of interest where the market makers are pre-engineering lows, spiking beneath those lows, creating higher lows, and breaking previous market structure, even though it's fractal. Okay, now I'm going to jump down to the 15-minute chart and show you guys how it's the same exact freaking pattern. Literally, it's hilarious. Do you see it? Do you see how it's the same pattern? It doesn't matter which time frame you see it on. It's the same exact pattern. They're leaving behind liquidity above highs to manipulate sellers. And it's just specifically designed because we know that there's a manipulation window. 99% of traders don't know that. Okay. They're sitting there trading all these retail methodologies, paying thousands of dollars for these course material mentorship programs that don't teach you any of this crap. Okay. Because they're too focused on patterns, candlesticks, Fibonacci retracements, RSI, MACD, and all this other bullshit that just clouds your judgment. Okay. So we can see now, let's actually go down to the 15 minutes so you guys can see the pattern. Okay. So Asia session. Okay. They leave behind a low. Market resets itself, leave behind highs. The market wicks beneath lows right here, grabs this liquidity out, creates a higher low that leads to a market break in structure. This is a bullish order flow continuational pattern, and they spike straight through those equal highs that we saw were left behind during the London and New York session manipulation window. Okay. So coming up into this analysis that I sent you guys, we had all this market information. So I sat down, it was roughly around like 9:15 p.m. after I read that little tiny bullish article. Okay. So we have bullish fundamentals. We have higher time frame on the hourly bullish order flow. We have 30-minute bullish order flow. We have 15-minute bullish order flow. And now we have an area of interest. One, and 2, where we can seek to be an immediate buyer if price action retraces down into this level to take price higher, to attack the equal highs that I mentioned to you guys on the hourly chart, or we can wait even further. And you guys saw in the message, I told you guys the best case scenario would be a pullback to area number 2 for a potential buy from where London session bought from to take price higher, to attack those equal highs. Okay. So when London session opened, and after this, I'll go over the time efficiency paradigm. I'm probably going to upload this on YouTube, so I'll give you guys a little bit extra. I'm not going to go over the time efficiency paradigm right now till after this recording is over. So stick around for that. I'll show you guys how I use the time efficiency paradigm to catch this trade as well. So we see London session open. I'll go ahead and play that price action out. London session open, and I mentioned to you guys, and I've been talking about this for quite some time. If London session is going to buy, they're not going to buy from a high. So as soon as the 15-minute candlestick opens for London session, look what these bastards do. Okay. London session opens, price action is at a high. Okay. How do we know it's at a high? Because the last area of interest where the market makers manipulated price was here in this area. Okay. Where we saw they set a low, they set a liquidity trap above highs, they liquidated those lows, created a higher low that broke market structure. That's the CYPRX institutionalized pattern that I teach you guys to pay attention to. And all of that took place. Where did that higher low take place at? Look to the right-hand side. We see major psychological levels, 167, 800. So that played a key role in taking this trade. Okay. So I jumped down once the market spiked on this 15-minute candlestick, straight down into the 167.800 level, and failed to close with a bearish candlestick below on the 15-minute chart. I was like, okay, well, here's our area of interest. I try not to buy during London session. Okay. Manipulation window, which we were still in that manipulation window. Is when we break out of that manipulation window. However, I was like, I'm not going to sit and sleep on the market maker's move to come and attack those equal highs on those bullish targets that I sent you guys. So I stayed up, jumping down to the 5-minute chart. Okay. You guys can see this nasty rejection of the 167.800. We already know higher time frame is bullish. We know hourly is bullish. 30-minute, 15-minute is all bullish, and we drop straight down into an area of discount from where previous Asia session bought from. Now we're in the manipulation window. All I was thinking was that the market is doing the same thing. They're going to come for those equal highs above the 4-hour equal high area that I sent you guys, and we're leaving behind in the manipulation London window early what?
Early sellers.
Early sellers, right? People that are trying to guess tops. They're thinking that because, look at this, because New York session had bearish price action, collectively speaking, they're not seeing that the market is still bullish. They're seeing sells. They're attempting to try and sell from some order block now, retail traders or retail resistance. Can you guys see how it all fans out? You guys see this? Manipulation window, okay? They're selling above highs, retail traders. They're attempting to chase some retail resistance strategy that does not exist. The markets do not understand support and resistance. You think institutionalized traders are sitting there at their charts, moving price action from support and resistance, like they're literally sitting there chatting, like, oh yeah, that's a good support, let's buy it. No, they're buying from psych levels based off of liquidity that they can see in the market. They can see orders that rest above these highs. They have technology and the tools in order to do so. So they're manipulating price during the manipulation window, which I've showed you guys, and how we analyze the charts is to move in tandem with the market makers. So 5-minute chart, you guys can see this candlestick, boom, drops straight down. We already know higher time frame conviction is bullish. So all I simply did was I placed a buy stop above this candlestick wick. You guys can see my buy stop right here. And that was roughly right at the 167.950 psychological level. So I was saying, if we can hold bullish above the 167.800, we have higher time frame bullish order flow. This could enter me into the market. We could see a little bit of price volatility in my stop loss moving sideways, but then this is a sound risk to reward ratio for price to come and attack those equal highs on the 4-hour chart that we identified, which are all the way up here at the 169 psych level. Okay, this was a 105 pip gain. Beautiful analysis. Logical target areas. Again, our logical target areas are all the retail traps that we've identified so far. Every single manipulation window in the market leaves behind early sellers. Okay, we have bullish order flow not only on the hourly, but all the way down to the 15-minute time frame. We also know that London session, if they like to buy, usually likes to manipulate price away from an area of premium to push it down into discount to buy from a previous area of interest where the market makers bought from. Here, you guys can see that market maker pattern where the market makers are setting up a trap beneath lows and highs, liquidating those lows, creating that higher low that leads to a market break in previous market structure. Okay. So we're simply just following the CYPRX strategy to the T, trading in tandem with the higher time frame, having logical reasons as to why the market could go higher. Remember, characteristic traits of a beautiful setup. That is what we're looking to find here at CYPRX, and we're being patient and sitting on our hands until we see those confluences play out. So now, simply all I did just to solidify that I was buying from a discount was I highlighted from the candlestick bodies where the previous market makers bought from, or the wick, whatever one you want to do, from the low all the way up to the high. And we can see that price came down into roughly about 100% discount. The market makers injected liquidity back into the market. I'll play the next couple candlesticks out for you all. Okay, my buy stop was triggered right there. We'll get rid of the Fibonacci retracement just to solidify that we are in a discounted price. Okay. And then boom, we came straight for the liquidity above London session highs. As soon as we did that, I moved my stops to break even. Why? Because we created another higher low, higher high formation, which gave me the conviction that a previous market structure high was violated. We know that once this happens, we are operating in an environment of uncertainty. So we do not know after this if the market is going to grab liquidity above this high and trickle back down, okay? Or if the market's going to continue higher. So what it is that I teach you guys is attempt to either do one of two things. Secure your trade by moving your stops to break even, so it is now a risk-free trade, or take profit. Mainly because I had a high conviction that the market was going to come into the equal highs on the higher time frame at the 169. I held the trade all the way until then. It was a 105 pip gain. After moving my stops to break even, the stop loss was not hit. The market continued higher. Boom, straight into those take profit areas. And since then, we're now in New York session. Okay. So absolutely phenomenal price action during yesterday's London session. Okay. Surrounding the CYPRX confluences. Everything to do with logic, everything to do with understanding, trading in tandem with the higher time frame, and not guessing tops. Like, you literally, as a trader, okay, have to try not to force things. Remember that your personal bias 9 times out of 10, if you're not trading the CYPRX confluences, is going to be trading via friction. Okay, all these gurus out here that people follow on YouTube and in the Forex community and crypto community, what they don't understand is that 90% of the influencers out there create friction for you. And remember that the CYPRX strategy is teaching you how to trade without friction. It's teaching you how to trade in tandem with the structural flow of the market based off of manipulation, based off of certain sessions, based off of specifically designed patterns in the market that the market makers must create in order to take price higher, that you as a predominant buyer, or for me personally, I'm speaking on behalf of myself because I'm a predominant buyer, can identify to be a buyer from if the market pushes price down into that level. And you guys can see here, we did exactly that. We're not going to sleep on that confluence. Okay. We're going to take price higher and we're going to gather that money from the market. All right. So I'll end the YouTube recording there, and I'll show you guys via the time efficiency paradigm how the market's reacted to that. So let's end that.
I won't stop till I hear him say,